Okay. Okay. Hey, hello everyone. So today we'll be talking about the NFP data. Okay, wait a moment. Okay, so let's begin our topic. So today we'll be talking about what will be happening in the future perspective and recap about the financial situations in September, and also talking about what do we need to be aware of in the future and so on. So let's begin. So let's brief introductions. So hello everyone, my name is Jaden, and I'm also the lead analyst on Market Insights. So um, that usually I will be providing Chinese live webinars that using microeconomics and also technical analysis. So today we'll be talking about overview of the economic situations and also why this NFP is so important. Besides of that, we'll be also giving some of the pointers how to give advantage on these situations.
So hello everyone, my name is Angel Monteslaros. So I had started on our new webinar called Forex Trading, the foundation class. It's a perfect webinar for beginner traders and aspiring traders. So if you haven't checked it out, it's on our YouTube. It's on our YouTube page, Market Insights Asia Pacific. And every Friday, you'll also be seeing me on Facebook for our short videos for market summary and outlook for the week. So stay tuned.
Okay, nice. So let's recap about what's happening on the financial market in September. So in September, we can see that the market faced a high or large range of volatility based on the market decisions on market its expectations that Federal Reserve is it raising interest rates 50 basis point or 75 basis point. So a lot of speculations around that. So uh, because of that, a lot of people has focusing on the economic data of the US, such as the retail sales, the NFP, the unemployment rate, and so on and so on. So we can see that last month the volatility is quite huge compared on August or maybe July or June. So as we know that Federal Reserve has been announcing another three consecutive time of 75 basis point, so which are also creating increasing the market volatility and continue pushing higher on dollar index. So a lot of people is asking why that Federal Reserve raising interest rates will be increasing the value of the dollar index. And because of, as we all know that all the central banks is raising interest rates, but why only dollar index? One of the main reason is that the market situation is quite unstable because all the countries is facing raising high inflation rate. So let me ask everyone a question. So um, if um, if if Malaysia is raising interest rates and US is raising interest rates, which one do you rather want more? You want dollar or ringgit? For sure, you'll be choosing dollar because why? The most important will be the liquidity and the needs will be increasing. So this is also the same reasons. All the countries facing high inflation rate, raising interest rates. So risk aversion has been increasing. Therefore, we can see that the dollar index has been keep on going higher and higher. So also by that, we also can see that last month, Canada has been raising 75 basis point interest rates. Switzerland has been raising 75 as well. UK also raising 50. Australia also raising 50. But Australia this week has been raising 25. Later on, we'll be talking about why. Apart from that, we also can see that Euro has been raising 75 basis point and so on. So overall, as we already mentioned, that raising interest rate, one of the main factor is slowing down the overall economic system. So we can expect that market will be going through a slowing phase or even going through the recessions. So we can see that the safe haven currency will be increasing, so causing also helping on the dollar index, the JPY, the CHF, and also creating a lot of pressure on the stock indexes, cryptocurrency, Australian dollar, New Zealand's, and also crude oil as well. So next we'll be talking about the next one is a chart quite interesting, saying that this chart This bracket that the line that I draw is actually on September. So September we can see that the overall volatility is quite normal, but just only three pairs that has moved quite rapidly. One will be the pound, the second will be the JPY, and the third will be the dollar index. So we can see that why the pound has been dropping quite significantly, and then afterwards has been rising back, and also what's the reasons why that the yen has been going back towards upwards and then now continue going downwards. So let's begin about it. So as we can see that the UK actually last week announcing on cutting tax cut, and also actually if everyone know that tax cut is pushing higher on the consumptions, so we can expect that the inflation rate will be going higher as well. So causing by that, a lot of people speculate that there's a lot of uncertainty issues in the UK. So we can see that the UK, the pound, the GBP has been dropped to all-time low. The mortgage deals will also pull from the markets, and the UK government bonds has been began to sell off history low as well. So, causing by that, the Bank of England has been announcing another fiscal policy that is buying long-term government bonds, so to stabilize the pound. But after that, this Monday, we can see that the UK Prime Minister, Tus, I'm not so sure what's the name, but overall, he actually pulling back on the tax cut. So, causing by that, we can see that the pound has been going back towards the new previous high. So this is also one of the reasons that this week actually the dollar index has been dropping and the pound has been going quite high. So what's your thought about it, this UK economic situations, and what's your thought about the GBP in the future? Can you have do you have any thoughts about it?
I'm actually intrigued by the decision of Prime Minister Liz Truss to, reduce corporate taxes. Everyone knows inflation is already high in UK. They have two-digit inflation, right? And it's no brainer that if you change your fiscal policy into lowering corporate taxes, it is inflationary. So you have this inflation problem, but instead of helping the central bank fix inflation, you're actually trying to increase inflation by lowering corporate taxes. So I'm not really sure where the government stands on this inflation issue, but the thing is that burden now goes to the Bank of England because they have to contradict whatever the decision or the action of the government is, right? And for the last week, what they did actually is to do long-term bond purchasing program to kind of counteract the action of the government to lower down the corporate taxes. But the bottom line is there would be more pressure for the Bank of England to increase rates aggressively or more aggressive than they plan to because they have their inflation problem already, and then the government is not helping at all. They're actually helping inflation more by lowering taxes. So I think we would be seeing more aggressive actions from the Bank of England. We have to take a look at their inflation data next month to see the actual effect of this fiscal policy, or the next coming months we have to check the effect of the fiscal policy to their inflation rate. And
Mm,
pound would probably go up higher, but let's see where will this inflation lead them. If the government and the central bank will not, find the balance and the good mix between fiscal and monetary policy, then it doesn't matter how much interest rate hike would the Bank of England do. It could lift down pound depending on how things goes out. But let's see. I'm not a
yeah.
fan of this contradicting fiscal and monetary policy.
Yeah, actually, I also have a thought that the pound will be dropping as well because there's a few things that we also need to be aware of. Is one is the England also shortage on energy prices as well because of the Russia and Ukraine, and one of the main reasons why that the UK inflation is quite high, also as euro as well because they are quite near Euro and UK. So usually we'll be facing the same thing. So one of the also expected that the UK might be facing, I think, actually the UK central bank. Bailey has been speaking that in October, the UK might be entering on the recessions. So I think if the Bailey, the central banks, also saying like that, so we can expect that UK actually have a lot of uncertainty in the future.
Has.
So yeah, I think pound will be dropping as well. So later on, we'll be talking about some of the technical analysis and what do we need to be aware of. Next, we'll be talking about one of the most important as well is the Japan has been intervened on the forex market first since 1998. So as we already can see that the USD JPY has been reaching through about around 146 to 147, that kind of area. So as we already know that why Japan continue to maintain negative interest rates and also maintaining their monetary policy. One of the main thing is pushing higher inflation rate, and the second is to boost their economic situations. So we can see that actually their stocks, their unemployment, their retail sales, their consumptions, PMI, everything is going quite well, but the yen has been dropping quite significantly. So after that, we can see that Kurojo, I think is the central bank, one of the BOJ, the one of the biggest, something like same as the Powell has been speaking, will be intervene on the Japan market. But a lot of market speculate that the yen won't be going quite high because as BOJ also deciding to continue to maintain the low interest rates and also monetary policy to support the country federal economy recovery. So what's your thought about it, Angel? Because my thought about it is USD as Bank of Japan actually is monitoring on the USD JPY. So I think USD JPY won't be going that quite high. So if I think the most peak will be 150. If the price really reach through something like that kind of area, definitely the BOJ, the Bank of Japan, will be try to intervene a more high package uh, on the forex market, and I think that time the yen will be going through a really strong momentum. So what's your thought about it?
It's actually confusing on the part of the market what the BOJ did, because it felt as if this is the first time that they have intervened the market. That's more than 20 years. But the intervention that they did, it's kind of like it felt like a half-hearted intervention. So I'm not really sure if the Bank of Japan is actually very serious on making sure that the yen stays on their preferred level. But
Mm-hmm.
well, let's see if they would continue to intervene in the future, because Bank of Japan, when they think of one thing, they actually commit to it. Hence, that's why they are the only country in the major currencies that have not changed their rates. It's still on the
Mm-hmm.
negative, so they stick to their monetary policy as as thick as they can. But for this intervention, I don't feel that kind of Bank of Japan on this
Mm-hmm.
intervention. So
Yeah,
I'm not really sure. I'm not really sure whether Japan is serious about this or not.
I think usually will be something like a warning because if it
Perhaps.
really want to intervene straightly, the market will be quite volatile. So I think this is something like a warning first, and then afterwards giving the market to digest this information. So afterwards, it really announcing another this kind of informations, the market will less volatile compared from the last time. Yeah.
It actually makes
So
sense, because it's been a while since we've heard anything from the Bank of Japan.
yeah.
So you're right. It could be a warning first, so that we will be prepared when they finally move seriously.
Yeah, but overall, I think that the Bank of Japan will be monitoring on the USD JPY
Of
because
course.
one of the main thing that intervene on the forex market is keep on selling on the dollar and keep on buying on the yen. So USD JPY is one of the main thing that I think the Bank of Japan will be keep on monitoring. So this is also one of the reasons why that I think recently the USD JPY has been quite a ranging area for quite some time. I think a couple of weeks and not couple of weeks. I think within 2 weeks, something like that. Yeah. So let's go from the next one. Next one will be also the one of the most important one is Fed actually raising another 75 basis point 3 times in a row. So we can expect it that So this is also causing by that the dollar index has been rising quite significantly in September. And also we can see US inflation rate has been remaining to 8.3%. Meaning by that we can see the demand for the commodities has been remaining high. So a lot of people or a lot of speculations saying that will be leading to another 75 basis point in the near next FOMC meetings. So I think there's a high chances that the dollar index will be keep on going higher. No matter you are using fundamental or technical analysis, safe to say that the dollar index is keep on going higher and higher. So we can see that currently that the federal fund rate is around range from 3% to 3.2%. And also this is the highest since 2008. So this is also one of the warning as well. So yeah, besides of that, one of things that we need to be aware of is the Federal Reserve actually hint that 2022 there will be raising another 135 basis point. So maybe next time will be 75, and next time will be 50, something like that. So from shorts, we can see that the dollar index will be keep on going higher and higher. What's your thought about it? Do you think dollar index will be keep on going higher, or do you think that dollar index has been reached through a peak and will be going downwards momentum?
Well, I think the Federal Reserve System is not bullish or anything like that. It's more of a data-driven approach to what is happening in the U.S. Um, I think that's why this NFP is very important for everyone, because it will solidify or debunk whatever speculation we have for for the interest rate next month. Because the thing is, inflation is going high, and so the central bank is trying to contain inflation by raising the rates. But when you increase the rates, what's happening in the economy is you're contracting it. You're squeezing your economy, right? And US is already on a technical recession. The central bank has to be careful not to cause an actual recession where everything is a mess. So I think
Mm,
they could be very careful in making any changes at all. I think they would increase. They would still raise the rates. After all, inflation is 8.3%. It's beyond the 2% inflation that the target's 2%. It's way, way beyond the target. So there's no brainer there would be an increase. The thing is, how much increase would be okay? Because you don't want to contract your economy too much. But you don't
mm,
want to be lenient as well because your inflation will soar.
yeah, yeah,
And
yeah.
And I
Agree.
think this is an important one because they've been raising the rates three consecutive times in a row now. And it's time for us to check what's the actual impact of these increases to the market. If the labor market is still healthy by this time, then I think the central bank could be more aggressive because the economy is taking it. It could take the punch, so they would continue. But if the NFP for this for tonight would be a mess, then that would signal the Fed that they have to be cautious. They have to slow down because the economy is taking a very bad hit on whatever action they're doing for inflation.
Yeah, yeah, agree on
But
that.
no question they would still raise.
Yeah.
Um, if you have checked the CME Fed funds rate, 80% of people are thinking or agreeing that there would be a 75 basis point interest rate hike again versus a 25% chance for a 50 basis point. So again, everyone is expecting a raise. It's just a matter if it's 50 basis points or 75 basis points.
Yeah, yeah, yeah. Agree of that. Because actually raising interest rates, I think that the Federal Reserve nowadays trying to raising interest rates to balance out the demand and the supply. So if you keep on raising interest rates, the demand and the supply will be imbalanced again. So we'll be going through a recessions. So I'm quite agree on your points as well. So yeah, I think next we'll be talking about more important thing will be why we need to pay a close attention to NFP data. A lot of people has been saying that why NFP data, a lot of retail traders or commercials or maybe the bankers recently has been keep on watching the NFP data. So later on we'll be talking about why we need to remember and why we need to watch out the NFP data today. So as we can see that non-farm payroll actually contribution to GDP, also showing the strength of labor market and also showing the consumer spending as well. And lastly, also one of the most important is the inflations. So as we can currently see that currently need to be aware of is the strength of labor market. As we can see that currently, I think that it's not the inflation rate is the most important, it's the core inflation rate. Core inflation rate is excluding on energy sites. So we can see that the core inflation rate is actually quite high, higher than the inflation rate. Meaning by that, we can see that the energy sector might be going lower, but other factors, inflation rate has been going higher, such as the
Food.
electricities, food, the rental, the cars, and so on and so on. So this is also one of the main factor that the Fed is more concerned about it. And one of the main factor is the labor market. As we already mentioned, that the labor market is indirectly affected on the inflation rate because nowadays the demand is quite high. The reopening on the economy, so a lot of people has been going. The company is keep on hiring people, but nowadays a lot of people don't want to go to work. So the demand and supply has been imbalanced. So in order to the company want to hire people, he will be increasing the average hour per earning. So average hour per earning will be increasing. Therefore, the cost will be transferred to our consumer. So we can see that other than that, everything will be expensive. So actually, the strength of labor market is actually one of the most important thing that we need to be aware of. So if today data it's lower than expectation, we can expect that the market is going a slowing phase and the gold market will be going higher. So I think today is quite important. No matter you are using the technical or the fundamental. So let's talk about why we need to be aware of this month non-farm payroll. So actually, as we already mentioned before, that the Federal Reserve has been raising 75 basis point three times in a row. Also, hidden that will be raising another interest rate about by 125 basis point in 2032. So a lot of speculations that this week market expect that the US non-farm payroll will be lower than expectations. So we can see that on Monday, the dollar index has been dropping from the high from 114.70, that kind of area, and has been dropping to 110.00, that kind of area. So this is a strong supporting area. And then afterwards, also one of the main thing that we need to be aware of is Australia interest rates decisions this week has been announcing on a 25 basis point interest rate hike. So as lower than expectations. Expectation is 50 basis point. So why we need to be aware of this? Because this is also one of the signals saying that the whole economy situations might be slowing down. So if Australia is slowing down, maybe the next will be I don't know, maybe the euro or maybe the UK, US, so on and so on. So this is also will be affected on the gold market or maybe on the dollar index as well. So one of the main reasons, also one of the main thing that we need to be aware of this today NFP data is so important is that the Federal Reserve Chairman Powell has been saying that we'll be adjusting the interest rate based on the economy data, and that which are the inflation rate, the employment, and the consumption data. So the inflation currently the inflation rate is about 8.3%. The consumption data has been going higher, but the PMI has been slowing down. So if this employment data or the employment change data is lower than expectations, we can expect that next week the CPI data might be lower than expectations as well. So this is quite important. So this is one of the reasons why today data is so important. And also we can see that the gold market, if you're trading in gold market, you can see the gold market it's on an uncertainty issue, uncertainty area. So it's facing a 1730 resistance area and also facing a 1700 supporting area. So facing a strong ranging area that we need to be aware of. So now is the most important question. Angel, what do you think about the NFP data? Do you think it's higher than expectations or lower than expectations?
I actually expect a lower than expected NFP data, but as long as it doesn't go beyond the 200,000 mark, US is gonna be okay. Because prior to pandemic, during the pre-pandemic era, US has been creating 200,000 jobs on a monthly basis. Hence, if we exclude pandemic, it should be the benchmark. So even if there would be a reduction on the new job created, it's gonna be crazy if US would be creating 300,000, 500,000 jobs every month. The market is already squeezed out. I mean, the unemployment rate is already quite low, at 3.7, 3.6, right? So you cannot create that much job as it is. But as long as it doesn't go beyond 200K, then they are still healthy. It's not going to
Mm,
affect the strength of USD at all. But if it goes beyond that, then the central bank has to rethink if they're being too aggressive or any kind of calibration that they can do. Because at the end of the day, even though they wanted to contain inflation, they want to make sure that the health of the economy is still there. You
mm-hmm.
go- you understand, right?
Yeah, yeah, I understand. Actually, yeah, no, I think no matter is higher than or lower than expectations, the main thing is that the Fed is will be continue raising interest rates. So I think this actually will be affected on the short-term momentum, the short-term sentiment. Short-term sentiment, it will be a lot of speculations and so on. So we can see that the market will be quite volatile later on. But bear in mind that we can see the gold market has actually uh, weekly volatility perspective has been reaching through $70 price range. So according from my statistic and the data that I collect, the weekly volatility average out is about $50 price range. So currently it's about 70. So we can see that there's a chances that will be happening something like the selling the buying the rumors and selling the facts. So I think there's the chances that the dollar net, if it's really lower than expectations, there's a chances that the gold market will be going high first, and afterwards will be going lower. So I think there's a chances because has been reaching through the limits on the average movement of volatility. So I think there's a chances that will be going back to the lower point. Besides of that, we also later on will be talking about more on the technical perspective and so on. So I think we have about 3 minutes time. So let's talk about some of the some. Let's see about the technical part on the dollar index, and hopefully everyone can tell me the results about the data later on. So yeah, so let's see about it. So now currently it's the gold market. So let's see about the gold market. Will it be a lot of volatility? So as we already mentioned that this week the price has been reaching through a 70 price range from this above 70 price range and yeah, $70 price range. And then after that we can see that has been breaching through a 4 hour time frame of resistant area. So this is the area that we need to be aware of. But we can see that also on the shorter time frame, on 1 hour time frame, we can see that price has been facing a strong supporting area. So we can see that actually the market is uncertainty. Is it going higher or going lower? So we
It's
can expect.
waiting for it's waiting for an excuse.
Yeah, it's waiting for excuse. Yeah, I also agree with that. So it either is going down and dropping, continue dropping, or or either it's going higher and will be reaching back towards above. So I think to the NFP data, it's quite important. Today or maybe next week CPI data, it's quite important. No, the price of gold will be deciding of the direction, and also the dollar index will be facing a huge supporting area or will be facing a huge uptrend or maybe continue a downtrend. So this is quite important that we need to be aware of. So I think it's about 2 minutes. So yeah, um, about 2 minutes, and hopefully everyone is looking through the forex factory or anything sources. So let's see, is it high volatility? We will be using 5 minute or 1 minute so that everyone can see it. Something like have
Initial reaction.
yeah. Let's see
When I
about it.
was a new trader, I do that. I trade that. I've learned my lesson not to not to go the exact minute the NFP was released. I usually wait for an hour or two, or
Yeah, yeah, yeah.
probably
It's
I would
actually
trade
also
next
the correct
Monday.
way. Yeah, actually, in last year, I quite frequently trade on the NFP data, and usually I think that you will be happening these kind of situations. First, we'll be going up for about $50 and $20, and then later on we'll be going
Going
downwards,
down.
and it will be quite strongly going downwards. So this is what will be happening later on. I think there's a chances that will be happening this kind of situations later on. So let's see about it. So it's about okay. So let's see.
All
Hopefully
right.
there's a big movement. Okay, I think it's okay. I think it's higher than
All right.
expectations.
Yes, it is higher than expected at 263,000.
Okay. So meaning by that, the dollar index will be keep on going higher.
Yes.
So yeah.
Unemployment rate is back at 3.5%.
Whoa,
Oh,
that's not
that's a
a good
huge
sign.
drop. That's a
Yeah.
0.2% drop. I'm
Yeah.
still waiting for.
I think previously it's 3.7%, right?
Yes, yes. It's
Wow.
3.7 and now it's 3.5. And then average hourly earnings is exactly as forecasted, 0.3%. This is a very good data for US.
How about the average hour per earning? The non data.
0.3%, exact, the same as forecast.
Oh, but is higher than previously or lower than previously? The previous month.
Same, same.
Or
The
same.
previous month is also 0.3%. So inflation would
Ooh,
still go up.
meaning that the
Gold,
inflation.
gold is already feeling it.
Yeah, let's see about the dollar index. Yeah, the dollar index also keeping going higher. So let's see about it. I think we can't trade from now. I think we need to wait for the price to break through a certain supporting area.
Yes.
So let's talk about some of the technical perspective. So I think let's talk about dollar index first. So in dollar index, if you guys have seen me through on my live stream, I actually have been saying that we'll be facing a strong resistance area in 115, and I expected that the price will be dropping below back to this area because there's a few reasons why. 115 is actually on 1986, 1980 from the 1986 area, the strongest resistance area. So we'll be predicting that the price usually will be facing some of the reactions, and then afterwards in this area we can see that the UK has been announcing some of the crazy fiscal policy and also a lot of price movement. So causing by that, the dollar index has been dropping. And afterwards, I already mentioned that the most important is 110.500. This is the one of the most important supporting area. So it's quite unlikely that the price will be breaking through 110.500. So we'll be waiting for the price to break through a momentum. So currently we can see that the price momentum has been breaking through because we can see that the structure point from here is really important. So we can see that the price has been breaking through above. So from that onwards, we actually can beginning to shorts on, doing longs on the dollar variety products such as the USD JPY, the USD JPY. But the USD JPY, you can see, as we already mentioned, that the price momentum it's not that much. So you maybe will be facing a lot of swap fees on Wednesdays and so on. So it's quite not a good product to trade on. So actually, I'm telling people to try to switch to another product such as the USD CAD. USD CAD actually will be going higher. There's a few reasons why. One is that the crude oil will be going lower. This is what we'll be predicting on. In the longer time frame, we expected that the crude oil will keep on going lower but from the shorter time frame, we be expected that the price will be reaching back towards this area. So overall, in the longer time frame, as we already mentioned, crude oil going lower and indirectly will be strong correlation with USD CAD. So we can expect that where's the USD CAD? So we can expect that the USD CAD will be keep on going higher as well. So overall, it's safe to say that the USD CAD will be keep on going higher. Other than that, we're also seeing that Euro USD will be doing shorts on Wednesday. If you guys really do watch my live stream, I actually saying that this is the area that will be doing shorts. Unfortunately, the price haven't reached through yet, but the price has been breaking through below. Because why we'll be doing shorts in this area? Because we can see that there's a few reasons. One, the resistance area. Two, we can see that the uptrend momentum has been weakening, and overall, and the point, as we already mentioned, that is the downtrend momentum has been intact on. So actually, doing shorts would be more beneficial than doing long. Apart from that, we also can see that the New Zealand USD actually also recommend people doing shorts. Also quite unfortunate, the price haven't reached through yet, but this is trading. So if the price really can't take our positions, that never mind, we'll be readjust our positions and keep on trying and trying. So also on Saturday, I mean on Wednesday, the price has been reaching through here, I think around this area, and I recommend people to try and do shots in this area because this is the upwards before the downwards. Already mentioned before, so this is the most important area. So apart from that, we'll be using Fibonacci to draw a range. So what we need to do is we need to have a ranging area first, so that we will need to know which area will be entering our positions and which area will be taking our SL or taking our profits and so on. So we can see that this is the ranging area, and then afterwards we'll be doing shots in this area and SL above. So we'll be keep on going lower. So next we'll be talking about the GBP USD as well. GBP USD actually also doing shorts. Recommend people trying to do shorts in this area because we can see that the upwards momentum has been weakening. So expected that the GBP USD will be keep on going lower. Besides of that, we also can see that has been breaching through the previous high. So overall, we can expect that the GBP USD will be keep on going lower. I think later on, um, I think Angel also have prepared some of the technical analysis as well. So Angel, do you mind to share your screen? Is
Oh,
it is
sure.
it is it possible to
Sure.
share screen? I think so. Yeah,
Let me
I think I remove first. Okay.
try to share my screen. Hold on. Here. Never share screen. Here. Here. Oh,
Okay. Let's see.
here.
Okay. Wait. I approve first.
Yes.
Okay.
So actually, for the scenario right now, you should be looking at the U.S. stock market. For sure, they would be a very good asset to trade right now if you are on a derivative, of course, because you cannot sell if you're actually
Mm-hmm.
holding the stocks. But if you're trading derivative, especially S&P 500, it's on a perfect position to sell,
Mm-hmm.
because of the fractal over here signifying that it's already on, it already has corrected here, a correction already happened, and with with the data that we have right now, um the Fed would be raising more rates. There's no doubt about this. Hence,
Mm-hmm.
there would be more squeeze out of the stock market, and S&P 500 is a very good asset to trade right now. Since there is a strong support over here, I don't see that the price would raise there. Um, the nearest support that I'm seeing right now is here at 3641, 3461, and 3500 area, this area over here. But this is on a daily time frame. Okay. It's also nice to take a look at cryptocurrency right now because usually they go in on a negative or an inverted relationship with the dollars. And as you can see, this is Bitcoin. It hasn't moved from this area over here. It hasn't moved outside the range yet. It's still there, right? This is our range over here. It's on the lower end of the range. Hence, we might be seeing Bitcoin going back to 17,500, which is already a move there, but it could still go lower. My chart doesn't go way back, doesn't show me too much, but if we go back on the previous prices, then the strong support would be at 13,500. There is still a way for Bitcoin to go down.
Ah, from my perspective, I think that the Bitcoin actually will be going ranging for quite a while because I have been researched that the cycle of the cryptocurrency, the market sentiment. So usually, as currently, because the economic situation, people is pulling out the money. So less people will be having money to contribute to the market. So the volatility will be decreasing and decreasing, and afterwards will be causing that ranging area. So after that, for a certain period of time, when the markets
Goes to
or
50.
maybe someone like Elon Musk or maybe some of the influence people has been coming in, the price will be more volatile because maybe will be manipulate the market. I think there's a high chances will something like that happens in the future as well. So manipulate the market and then going higher and higher and higher. So from safe to say that can say
It's
that because of the current economic situations, the people is pulling out the money. So causing by that, the volatility of the cryptocurrency would be reducing quite
right.
significantly in this year. So this is my thought about the cryptocurrency market.
I actually agree with you with the liquidity thing. As you can see, it's not moving that much. This is not the usual range for Bitcoin or for cryptocurrency. Usually it goes up or it goes down. It doesn't really go this much, and the range is actually not that big.
Yeah,
But
from my
if it
yeah,
breaks
from
below this area,
uh-huh.
then it's gonna go here at 13.5. If it
Yeah,
breaks, but it's still
yeah,
within the
that's
range.
I
So we have
think
yet to see.
Yeah, I think that actually the cryptocurrency market will be going ranging for quite a while because from my research is saying that it's about 6 to 9 months, that kind of area. So from currently it's about 7 months. So we can expect about 2 or 3 months or more. So safe to say that the market will be keep on going a
December.
ranging area from now. Yeah,
I'm actually waiting for December to come.
December to come. Okay.
I'm taking a look at December to come. For Ethereum, it's still under pressure. You see, this is MA 200, both of them,
Mm-hmm.
way below than the moving average 200. This is SMA and EMA, both of them below there. And if you if you zoom in a bit, it actually fell already and now on a ranging area over here. So our
Mm,
nearest support would be somewhere here at 996. But still, if it breaks here, then it's gonna go on this area. But my bet is lower on Ethereum for now. I was kind of hoping it would go up based on the merge that happened last month, but it didn't. Surprisingly,
mm,
it went the opposite way.
mm. I think currently, from my perspective, I think the cryptocurrency will be going slower and slower. So, my recommendation is don't treat cryptocurrency from now because less volatility, meaning by less trading opportunity. So, my suggestion is more on trading on the maybe dollar related with dollar or maybe related with the currency market because the currency market will be much more high volatility on the next
Yes,
couple of months. That's for sure because raising interest rate definitely will be influencing on the currency market. So I think on the next couple of months, easy to say that we'll be keep on doing on the currency market, such as the dollar index, as we already mentioned. So yeah, I think let's talk about the commodity markets. So I will be taking back. Hopefully, don't hack out. Okay, so let's talk about the gold market. So everyone should be quite curious about what the gold market will be happening in the future. So let's talk about the volatility perspective. So from the daily perspective, we can see that I'm using Elon Wave. So Elon Wave, there's a lot of theory about it. A lot of people has their I their own way to identify their wave. So I will be using volatility to make it more structuralized and also more easy to understand. So from now we can see that this is a one, this is two, and going back, this is a one, two, three, four, and going back to the five area. So why we can see that this is a strong resistance area because this is the retracement same as this one, and this is a small retracement. So this is a one, two, this is a one, two, and three, and four, and then going back towards something like that. So we can see that actually is big retracement is about something about 111 or 105. So currently also reaching through 111, that kind of area. So we can expect it that the price will be going back towards bottom area. So we'll be waiting for the price to reach through. So from here, you also can see that the ranging or the retracement is about 111 or 112, that kind of area. So the price has been reaching through that kind of certain area and also facing a strong resistance area. The most of the mean market structure, and afterwards on the 4 hour I already mentioned that if you I can do a small promo. I actually do another group chat and has been saying that the gold will be going down because I think or from the technical perspective or the fundamental, the gold will be keep on going lower the next couple of weeks or maybe months. My prediction is the gold will be going back towards the bottom area or maybe even lower to 1580. So
Oh.
safe to say that I actually keep on doing shorts on the gold market. So currently we are waiting for the price to breaking through this area. Why? Because we can see that this is the most structuralized and also the one of the most important area that we need to be aware of because this is the short-term uptrend momentum. So if this momentum has been breaking down this above, we can safe to say that the price of the gold market will be keep on going lower. So you can see that actually this is facing a stronger supporting area that before I have been saying that in Wednesday live streaming. So we are currently waiting for the price to breaking through this area. So if this price breaking through this area, safe to say that I think the price will be at least will be reaching back towards this area or maybe even lower. So overall, I think the gold market will be keep on going lower and lower and will be reaching maybe much more lower to 1580. And afterwards in November and December, after that, the gold market will be retrenched back and going back towards a strong rebound. Why? Because from my statistic and data that I collect, usually on 96 or 97% December, the gold market will be going a rise. So this is quite for sure. I think I remember last year actually I do long on the gold market on November, like mid range of November, and then I've been holding $100 price range. So that is a really strong memory recall when that really happens. So we also expectations that in November or December the price momentum will be keep on going higher on the longer range. But from now, shorter time frame, the price will be for sure will be going lower and lower. So we can see that the price actually has been breaking through this supporting area. So we can expect that the price will be continue going lower. So I think this is quite a great sign that the price has been lower. So we'll be waiting for the price to confirm that the break is confirmed on the 50 minutes. After that, we'll be doing shorts onwards. I think there's a lot of chance doing shorts, that's for sure. Agent, what's your thought about the gold market? Do you think is it continue going higher or will it going lower from now?
For the meantime, on the short term, it's gonna go down. There's no doubt about it. Because gold and dollars, they have inverted relationship, right? With
Yeah.
dollars, you're earning more when the rates are higher. Gold, you don't earn interest rates on gold. Hence,
Yeah,
if you put it on the bank, if you put your gold on the safe bank, then you would be paying for the bank to keep your gold. So, on an environment where the interest rates are going higher and higher, it's actually smarter to keep your assets on currencies that earns you interest
yeah,
in comparison to gold. But I would like to add up on the one that you mentioned that you're thinking December onwards it's gonna go up. Actually, I've been watching gold for some time, and I just noticed that during December to February, there is usually an increase in the price of gold. And I'm not sure if I'm right, but can I correlate it with the culture of giving gold during New Year? Because
yeah,
December you usually give gifts, right? And usually it's an easy gift for someone to buy gold, especially if you're in a Chinese area or an Asian family. Gold is something you see as a value. You give it to your friends, you give it to your family on the birthday, especially on New Year's.
yeah.
Hence,
I
I
heard
always
that.
see this rise on December to February during those months because it's Christmas time, New Year, and then Lunar New Year.
Yeah. But from the data has been showing that actually India is the most buying
Yes,
gold
buying
country.
gold.
Yeah. So overall, I think not so sure. Is there any events on December in India?
I
So yeah,
am
that's
not
the
sure as
expectation.
well. I don't have much Indian friends, but for the short term, I agree with you. There would be a decrease on gold value, but I'm actually thinking that the direction would be a tug of war between the U.S. economy inflation situation versus the geopolitics that is playing on the other parts of the world. If you've been following Russia and China and Ukraine, there is a brewing tension on that area, and it could give more premium for gold, especially it's a safe haven asset. So
Mm,
we have to be careful about those things as well. But as of the moment, the eyes of everyone is on gold and dollars. So it's no brainer that gold would be lower for the short term. But on a technical perspective, since you're looking at H4, correct? Or lower
in 50
M15, I'm
minutes.
actually
Yeah.
looking at gold on a higher time frame.
Okay, which time
And
frame? The
yes, on
daily?
the daily, yes. And I'm thinking that it's gonna go back to here, this around 1600 area, where
Uh,
the low, where the last month low was. It could go
okay.
there for this week until next week. We have to wait for the inflation data next week, but I'm thinking that inflation would also go up for
Yeah,
next week, and that would benefit dollars. Not a good story for gold. If that breaks 1600, um, my next support would be somewhere in 1500 area already.
1,500 area. Okay, quite
Yes.
similar. Actually, my one is 1,580, that kind of area. So
Oh,
let's see about it. But overall, I think for sure the gold market will be keep on going lower. So yeah, safe to say that doing shots from now onwards will be quite beneficial. So I will be keep on doing shots on the gold market because we can see dollar index has been racing back towards and breaking through this upwards momentum, downtrend momentum. So overall, safe to say that dollar index will be keep on going higher. So gold market definitely will be going
go
lower from
down.
now. I think the stock indexes has been dropping as well quite significantly. So yeah, so the dollar index will be gaining strength in the future. So let's see about it on next week. The CPI data. So yeah, I think let's begin our last sections will be the microeconomics outlook. So this one will be Angel will be preparing all the informations and also will be talking about it. So let's begin. Okay.
So these are our macroeconomic outlook for the week. Let's start off with the biggest economy on earth, which is the U.S. We've been seeing resiliency on the labor market for quite some time. They have already raised their interest rates for three consecutive times already, and still the labor market is very healthy. So with the given that the data tonight is very good as well, we will see the Federal Reserve more increasing the rates aggressively because the economy can still take it. Um, the average is 200,000 jobs per month, and they have created this month 263,000 jobs. Way better than the forecast and way better than the average for the previous months. And that is a strong indication that the economy is healthy. There is no reason for the Fed to be cautious on raising the rates. They will raise the rates to combat inflation. For sure, there would be a 75 basis points next month. But let's see. If inflation data next week would surprise on the upside, then you could probably see 1% increase. But
Mm,
um, it's safe to say for now that based on the data that we have, 75 basis point next month, no doubt about on that one. For the euro area, actually, all of the eyes are on Italy right now because Giorgia Meloni is the first Italian woman prime minister. No ever, she's the first female one to be a prime minister for Italy. And one of the things that we have to take note is she is a right wing person, or she's a right wing politician. She's the most right wing ever since Mussolini, and Mussolini was handling Italy since during World War II. So it's like Italy is going back to World War II now. Italy has not been doing well for the past years, and the debt and the relationship with the EU will be watched on, especially that Meloni is on the right sector of the politics. We will see what will be the relationship between Italy and European Union, especially when she starts appointing her cabinet members. That's where we're gonna see the actual direction of Italy. Italy is the third largest economy in the European area or the Euro area. So, um, this is something that we should be taking a look at. Euro area. Before there was what's the right term? Before there was some rumors, especially during presidential or national elections, regarding if there would be more countries following UK with their Brexit.
Mhm.
Hence during the France elections, there was a rumor about a Frexit. If
Mhm.
what's her name? The the part what's her name? I forgot about her name. She's also female. Running as prime minister, but Macron won. So the France exit on Euro area is already out on the issue. Meloni, we're still not sure whether the relationship of Italy would be okay with EU or not. But let's see. Hopefully, Giorgia Meloni would be an okay um prime minister for Italy, especially that Euro as well is not doing as a whole. So they should be working harder for this one.
I
Um,
also saw some of the articles saying that actually Italy or maybe France is trying to leaving the Europe Union maybe in the next couple of years. So I think this is also one of the things that need to be aware of. Yeah, not so sure is it true or not, but I think it's a quite solid point because Europe Union is actually a lot of country inside of it, and Italy it's currently the debt is quite high. So actually, Italy it's keep on saying need to have compensations and so on and so on. But if Italy have compensations, will be affected on other Europe Union countries as well. So we can see that actually a lot of people won't be agree on this method, so causing by that, actually a lot of people has been speculate that Italy might be exit the Europe Union maybe next couple of years, maybe. But I think this is also one of the big thing. If really that kind of things really happens, the euro, I think that kind of moment really happens. The euro pairs definitely will be keep on going lower and lower. Yeah,
yes. I think it's probably because there are a lot of member states within the Euro area, but most of the countries are actually benefiting from the membership. Only a handful of the members are actually contributing to the European Union. So it's like you're gonna think, are you benefiting from this relationship or not?
yeah. Agreed.
You don't want a membership that you're the one paying, you're not getting anything. But
Yeah,
I don't think that Italy could um stand on its own as of the moment because they have very huge debt. But let's see
yes,
where Maloney would go because we will never know if a person is on the both ends of the spectrum. It's hard not to think of a bad situation.
yeah.
Moving on, let's
Okay.
go to the next slide, which is the UK. We've been talking about this earlier. So they also have a new prime minister, which is Liz Truss. They've been having several prime ministers for the past months, for the past years, sorry, and I'm not really sure if that means that the government of the UK is not very stable. The thing is, during campaign period, Prime Minister Lee Truss actually promised that there would be reduction on taxes, and she did that the moment um she sat as Prime Minister. So instead of raising taxes for next year, they actually will not increase corporate taxes.
Mm,
And um like I mentioned earlier, that kind of action from the government is actually inflationary. if we've been worrying about the US having 8.3% inflation, the UK is on a more dangerous position because their inflation is around almost 10% or more, around two digits already, and they are already way beyond the 2% target. And if you're not gonna increase your taxes for next year, then that would mean that the government is actually trying to increase or contribute to the higher inflation that they are already experiencing.
Yeah,
So it,
actually,
so the,
Bailey also saying that in October, the CPI will be reaching around 13.7%. So I think it's quite high if that really happens. So yeah.
um the Bank of England is actually a very powerful central bank, so they have a lot of means to contradict this fiscal policy, but it's kind of hard for a government and a central bank to be doing two opposite directions. They should be working hand in hand to make sure inflation is on check.
Yeah, yeah,
But
agree.
but politics is playing a role here because the fiscal policy is not actually more on economic side. It's more actually more on the politics side, and hopefully they will be able to reduce the impact of fiscal policy on this one, or else pound is already not on a good place. We were gonna see it on a much on a worse place if this doesn't play out well. For the Bank of Japan, we already discussed this as well. They intervened for the first time, and it's a 2.85 trillion yen action from the Bank of Japan. Although it was felt for a few hours, the market participants actually ignored it hours after. But for the yen right now, what's actually benefiting from the exchange rates are the corporations.
Yeah.
Remember, Japan is an industrial and an export country. So if their
Mhm.
currency is very competitive, then the products are also competitive on the international market. Hence, that's why we're seeing a 50-year high on corporate profits for Japanese corporations.
Mm. Yeah, I agree with that actually. Yen actually is if the yen continue to going lower and lower, actually will be beneficial on exports. So yeah, I think I'm agree with that actually. So causing by that, the economy on the euro, I mean the Japan will become continue going higher, and also the inflation rate will be going higher as well. Yeah.
Next.
Okay.
For Switzerland, they are actually Swiss franc is the best performing currency for the G10 against the USD this week.
Mm-hmm.
And what's new about SNB is that there are two things. First is that they have ended the era for foreign currency purchases. This intervention from the Swiss National Bank is actually what makes trading CHF very dangerous. Because
Mm.
they always intervene, and you'll never know if something is not right in the eyes of SNB, they would intervene. That's a crazy
Oh,
thing about Swiss franc, right? So it's kind of scary to trade it if you're a beginner trader, because you'll never know. You are not very familiar with the fundamental analysis. You have no clues when will the SNB take action or intervene. But since they have ended this era, that it actually makes Swiss franc less risky for traders. Aside from the foreign purchases, for foreign currency purchases, they have also ended their 8-year negative interest rates. They have raised their
yeah.
interest rates for the first time, and it's a positive digit.
Yeah, yeah. I also know that actually it's going through a negative territory for quite a long time ago. Now currently it's raising interest rate to it's a positive number right now. Yeah.
Yes.
Mhm.
Actually, I have already created, for me, Thomas Jordan already created a persona that is a dangerous person. remember
Oh,
remember the time when euro was Swiss franc was unpegged with euro, that caused a
yeah.
lot of disruption on the market. And ever
Yeah.
since then, Thomas Jordan, whenever I think of Thomas Jordan and I saw his name on the news, I always think that, uh-oh, something's not right with Swiss franc again. But I think
Okay.
my connotation for Thomas Jordan would be a little bit better off, since I know that they are actually trying to make things easier for traders when it comes to Swiss franc. Hopefully, it maintains that way. So there is a very good opportunity for Swiss franc for me for the past months. But I'm actually very scared to enter because it's hard for me to determine where Thomas Jordan will appear or
Okay.
not. That's a risk for me. But since SNB is changing, I might also change my perspective on Swiss franc.
Hmm. Okay. Interesting. Okay.
Um, Next, for Canada, well, I haven't seen their. I just saw USD right now. Let me take a quick look on their data right now, because they are also. Oh, their data is good for employment change, because for the past 3 months now, they have been raising their rates, same as the US, but the
Mm-hmm.
US actually has been generating jobs. Even though they are raising their rates, they are still generating new jobs. But in Canada, while they are raising their rates, they are actually losing jobs for 3 consecutive months now. And I just checked, and they have created 21,000 jobs for this month. And surprisingly, unemployment rate is also down from 5.4% to 5.2%. A reduction of
Oh.
0.2%, the same as the US. So I think Bank of Canada, that would give more confidence for the Bank of Canada to continue raising the rates, because employment data has been improving.
Mm. Oh,
For
okay. So
us, sorry, do you have?
I don't know. Yeah, I never thought that the Canada unemployment rate is lower than expectations. I thought it's higher than expectations.
It is
So yeah.
higher than expected for this month. But for the
Um.
last 3 months, they actually lost jobs. So they are raising rates, and then the labor market is going down. So that means that the Bank of Canada could be cautious on raising rates, but we have found an excuse now for the Bank of England to still continue raising the rates, because the employment sector is giving us signs of recovery. For Australia, um, as you have mentioned, we are expecting a 50 basis point increase on the cash rate, and that's not what we
Mm-hmm.
got. So they could be being cautious on raising the rates, but they have already increased the rates for 6 times for this year already. So they could be just watching what. I'm not pretty sure with Australia if they're gonna keep on raising the rates on the next meeting, or they would pause for a bit and see their data. What do you think about that one?
Overall, I think Australia usually will be more hawkish and more faster to make a move. So, if the Australia really slowing down the interest rate hike, I think there's a chances that in the future will be slowing down in couple of months or maybe to see whether or not the data is slowing down. So if we can, or if the in the future the Australia unemployment rate really increasing, or maybe the decreasing, or the consumption really increasing, or the energy sector has been going higher as well, I think Australia will be keep on raising interest rate. But safe to say that actually I have been reaching, I have read through the whole RBA statement. So safe to say that in the future they will be keep on going raising interest rate, but maybe more lesser, maybe continue the 25 basis point. Yeah.
Oh, all right. Finally, we have New Zealand.
Okay. So let's see.
Sorry.
Ukrainian, or
Uh,
if
uh,
I miss it.
yes. Oh, where is it?
Right?
It's not there.
Mm,
Anyways, let's just focus on Ukraine. These are territories outside the major currencies. So for this week, the eyes are aside from the US scenario, right, the eyes are actually on Ukraine because there was a referendum that was conducted on four Ukrainian territories, and they all agreed to be annexed to Russia.
Mm,
So they have collected four more territories, or not collected, but they have took four more territories from Ukraine. And if you've been following Zelensky's interviews and stances previously, he already warned Russia that there would be no peace talks if they would continue on taking more Ukrainian territories. They just did four
mm-hmm,
more. Hence, I'm not seeing any peace talks. I'm not seeing any um, consolidation between Russia and Ukraine as of the moment. Because Russia just basically burned off whatever peace talk there could be by annexing four more territories.
mm,
The EU is calling the referendum illegitimate simply because I've heard stories that most of the people from Ukraine already left. They are
mm-hmm.
already somewhere else in Europe and in US, and there are a very few people left already on these areas that they have annexed. Hence, when you do a referendum, it's not actually showing you the actual opinion of all the people who has lived there. They just did the referendum for whoever are still there. And the United Nations is still acknowledging the original territory of Ukraine. They are also not acknowledging this referendum. So, um,
Yeah, see to see that actually, I think Ukraine and Russia will be continue to conflict for a couple of while, maybe a couple of months or maybe years, so on. Because actually, when Ukraine announcing to join the, I think is what they
NATO,
call, yeah, not yeah, not yeah, NATO is it
NATO,
not,
yes,
yeah,
NATO.
yeah, joining NATO is actually forcing out the Russia to make a choice because the NATO actually is kind of in between on the Russia territory already. So I think Russia it's really don't have any choices to make these decisions. So I think it's really the last thing he wants to do it. So overall, I think Russia will be keep on going to attack and won't be surrender. I think for maybe a couple of months or maybe a couple of years. So I think will be continue conflict and so on will be affected on the crude oil or maybe the natural gas because currently I think the natural gas has been leaking. Has been saying there has been leaking issues on the natural gas, so causing by that will be really affected on the euro sector because euro is facing on the winter soon. So I think natural gas volatility will be quite high in the next couple of weeks.
There
So
was
yeah.
actually a news this week that I have forgotten which country exactly in Europe, but there would be like a 2 hour break for energy during the starting this week or next week, in because they are already forecasting that energy won't be enough for winter, so hence there will be like a 2 hour disruption
Oh,
for energy.
I think
That's not a good
doesn't
idea.
yeah, that this is not a good idea and also not that much help, I think. So overall, yeah, I think natural gas will be having a high volatility in the future. So let's see about it. So
And for
yeah.
other parts of for other parts aside from Ukraine, I'm also taking a look at China right now. They have been on this economic difficulty. Most of the countries, like in the US or in Europe, the problem is actually more on inflation. But in China, most of their problems are domestic issues. For the past years, I have been whenever there is a news about China, it's always a crackdown. So there was a crackdown for private tutorial schools. There
Yes.
was a crackdown for real estate. Now there is a crackdown for tech companies.
Mm-hmm.
I am not sure if it's the right time for the government to do crackdown, especially when their economy is already fragile. And
Oh,
on top of those crackdowns, they have their zero COVID policy, which is
yeah.
crazy. It's driving everyone nuts. I've been seeing news where people are forcefully dragged into their homes. They cannot leave their houses if there would be few cases of COVID in their area. Well, in my country, we still have COVID. We still go out. We are now allowed to leave our houses without mask if we are on an open space. But on China, it's different. It's like they're going back to pandemic area where everyone else is already trying to live with COVID. And that
Mm,
spells that if you're a business, it's hard to do business with China because you'll never know when will they close every establishments again. If there would be very few cases of COVID in a certain place, they close everything. So it's hard to do business with them right now.
mm, okay.
Chinese yuan is I've been selling Chinese yuan for the past months already, especially when they have started this zero COVID policy. Because I'm thinking that it's gonna be hard for investors, international investors, to do business in China, and it was right.
Oh, and how was it? Is it?
I've been trying to. I have already. I trade Chinese yuan very rarely, especially because I'm scared of the spread.
Oh,
The
okay,
spread is
understood.
not friendly. But if there are opportunities for Chinese yuan, that's the time that I trade it. So for me, I only traded Chinese yuan twice. The first one was around 2017 when the issue with China and the neighboring countries are there. And so is the issue with between US and China under Trump, that China and US started this what's the right term? Taxes. They're gonna put taxes, import taxes here, taxes. They're fighting everyone for taxes, and international, or what's it? It's not international. It's in information for, because in China you're supposed to divulge your information to the government if you wanted to do business within China. China, US would retaliate and add more taxes on Chinese products coming in the US, and China would also do the same. I actually bet on on that scenario, and right now I've been selling Chinese yuan as well, but I don't trade for one big trade. I kind of cut it to make sure
Uh,
that
then quite good. Because I remember yuan is actually dropping quite much, if I'm not mistaken. Yeah.
But there is another issue with China. Hopefully I'm wrong. Hopefully I'm just paranoid, but 2 weeks ago Xi Jinping and Vladimir Putin had their 39th meeting, and the topic is international and regional topics. But coincidentally, a week after, the Ukrainian referendum happened. So
Mm,
there are rumors that she and Putin, they did not just meet for whatever topic it is. They are actually brewing something, more collaboration between China and Russia. And
mm,
hopefully the issue with Ukraine and Russia stays there, and issue of China and their neighbors stays there. If there would be any more collaboration between China and Russia, especially that they are surrounded with their um it's not a right term for you to say it's enemies, but somehow let's say the word enemies, 'cause they have disputes. China has disputes. China has a lot of territorial disputes, right? And if China and Russia would be closer to each other, then it could create a sense of defense mechanism for other countries that would heighten their defense wall than before. Hopefully that's not the case, but if that happens, then gold would go up.
whoa. Okay. Interesting. Okay. So I think it's the last part. I think that's the last part already. So yeah. So if everyone is interested on this Macroeconomics Outlook,
Yes.
everyone can look through our Facebook page. We'll be providing every time and also the update versions on Facebook, Telegram, TikTok, and in the future we'll be having Instagram as well. So yeah, so thank you for this four people. This currently has been staying out. So I also want to speak in Chinese because there's few Chinese people. 谢谢
Yes.
大家大家的参与，还有这个五大叉。我知道 Hitomi 已经是不在了，但是全部五大叉还在的话，真的是蛮感恩一下，真的是从头到尾抽到最后。但是 overall 来讲的话都 OK 了，所以谢谢大家的支持，然后还是一样喜欢的话帮我们点赞、订阅，然后按起小铃铛一下。OK，好。Thank you for everyone joining. I think that's all for today. And also, we have been saying about 1 hour 30 minutes for quite long.
Quite a long time.
Yeah, yeah. I think that's all. Thank you for everyone joining and joining. So see you next week, next Wednesday. So yeah,
Bye, everyone. Thank you for staying with us.
bye. Okay.